So let's talk about what's going on and why Mexico here is a sale. So, starting at the beginning, I moved to South America almost 3 years ago. I planned a brief vacation to Argentina. After only a couple weeks, I was mesmerized. How could such an incredible country mismanage everything so completely? The flight of capital and investment was mind-boggling. People intuitively knew how to navigate double-digit monthly inflation. They financed every purchase. Need groceries for the next 2 days? Great, 8 monthly installments. You can see here, annual inflation peaked around 300%. Inflation at this point is crashing back to single digits and on a year-over-year basis could be near flat by the end of 2024. I spent months researching the commodity sector, politics, and economic cycles. There wasn't trust in government or data. None of the terms you learn in a textbook applied to a country dealing with real hyperinflation. If you weren't operating in the black market, you were paying an unofficial tax. Only tourists and suckers paid taxes. The country moved to a cash and barter system, anything to get around price controls. When Coldplay tours started selling out, the governments announced a new Coldplay dollar. It was registered as a currency, but it was just another tax. Essentially, if you could afford to put Coldplay tickets on a credit card, they could tax you. My crash course in Latin American economics had begun. Here's what I learned early on. Latam politics and economics go hand in hand. Institutions reflect the political party's view of equality and debt. There is no unwinding the business cycle from the social agenda. The more I tried to research the boom-bust cycles, the more I needed to understand the Menems and the Kirchners of Argentina. This is Carlos Menem, known for his flamboyancy and the one-to-one peso peg. It set the country up for the greatest crash of the modern era. This is a reminder when you read the Wall Street Journal experts talking about true dollarization, how the consequences can end up for an economy. Virtually all of these LATAM economic busts were foreshadowed by political shifts and consolidation of power prior. Institutions in these countries are only as strong as a swinging pendulum of populism. When countries carried debt burdens in foreign currencies, they were time bombs. Excessive exposure to commodity prices or outside political interference could become a spark that would ignite frustrations that were even years or decades old. A common thread was developed markets oblivious to the risks and shifting tides. Banks that were primary lenders to Latin American sovereign debt in the 1980s were no more prepared for defaults than international organizations in the late 90s. We decided to get serious about investing in Argentina, realized the pendulum had swung too far. Things could theoretically get cheaper if the BCRA just kept printing money. However, assets were overdone to the downside. The only hedge against fiscal debasement were industries that create dollars. The arbitrage opportunities are endless when real inflation sets in. Once you break money, all bets are off. Argentina was on the cusp of breaking its money. You can listen to an interview about investing in Argentina I did with Javier, a former Undersecretary of Ag. There's a formula for LATAM debt cycles. Outside forces, such as a recession and a strong dollar or excesses of past governments, cause a shock. Banks and foreign institutions deem it no longer investable. Debt builds, social spending spreads, and revenues fall. As the economic outlook worsens, the blame is directed at foreign powers, the rich, and corporations. It is effective because often it's true, maybe not all of it, but certainly parts of it. This is why the landslide victory for the ruling Morena party in Mexico caught my attention. Mexico is on the cusp of a major push left, and the market implications are significant. Foreign investors often miss the warning signs. Let's talk about what is happening and what it might mean. First, I don't know a lot about Claudia Sheinbaum. A cursory search shows she rose through the AMLO tree of Mexican politics, and her accomplishments have been centered around what we in the West would call ESG or DEI type initiatives. She served as the Secretary of Environment for Mexico City when AMLO was the head of the government there. She would eventually replace him prior to being elected president. It was not her victory that was the warning sign, but the margin and the consolidation of power that was already underway. Reminded me of the Lula Dilma team in Brazil. Lula was pulling the strings, had his hand-picked successor provide continuity as he was consolidating power in institutions and the country's resources. Operation Car Wash exposed just how systemic the corruption had become. Argentina experienced a similar period under Cristina Kirchner following Nestor's death. Nestor had already laid the groundwork. We'll revisit these later. The North American trade bloc is a problem if America plans to enforce higher tariffs on China. An important starting point is recognizing the nearshoring narrative is mostly noise and grandstanding. The U.S. government's throwing a lot of money at domestic manufacturers in nearby countries to diversify away from reliance on China. This is the narrative. It's partially smoke and mirrors. Proponents will show Mexico passing China as the U.S. largest trade partner as proof of success of nearshoring. It's not. This is a chart from the Dallas Fed. You can see here Mexico was gaining and really picked up around U.S. tariffs announced on China, and then post-pandemic took over as China fell off. But let's dig a little deeper. And in the notes, I'll attach some articles and information that I cite here, and do your own research. So there's been an investment boom in Mexico since the days of Trump's trade war, and here are some of the numbers. The China-Mexico Chamber of Commerce showed 3,000 Chinese companies had set up in Mexico to position for U.S. nearshoring and reorienting of supply chains. In 2023, CBRE reports that 40% of demand for industrial space came from Chinese companies. Only 22% came from American companies. Taxes on cars imported to the U.S. from Mexico incur a 2.5% to 6% tax under USMCA NAFTA, while vehicles from China are taxed at 25%, which is now shifting to 100% under Biden's tariff hike. Section 321 removes tariffs or taxes on goods under $800. Many items that were impacted by Trump's original trade war saw their HS codes changed to low-value goods that were exempt, and the flow shifted to Mexico. HS stands for the Harmonized System, which was implemented in the late 1980s to standardize global trade. Mexico appeals not only for its nearshoring, but also its ease of transactions. FreightWaves outlined how an Amazon retailer selling Chinese goods from Mexico is a simple transaction compared to an electronic Chinese storefront. Another trick has been shipping products in their component parts. Under Section 321, a product value above $800 can be shipped in pieces without any limitations. Ship 3 boxes of $500 items rather than 1 box of $1,500. Maersk and other multinational shippers have expanded massive warehouse operations in Mexico for this exact reason. The growth of container shipping is further proof. While many are focused on the strong flows into the U.S. ports, as many front-run the expected tariff hikes post-election, but the container flow to Mexico has been even stronger. Containers from China to Mexico grew a whopping 32% in 2023, from 669,000 to 881. Suffice to say, Trump's trade war kick-started the shift of Chinese goods coming to the USA through Mexico. Biden's American-built initiatives boosted it further. Both parties made cracking down on China's access to sensitive technology and the American consumer a cornerstone of their platforms. But the reality is far less than advertised. It's unlikely that Mexican leadership will show its card when it comes to U.S. and China tensions. There's no incentive for them. But it's important to note that much of the boom driving the increase in Mexico-U.S. trade is coming as a direct result of Chinese investment and shifts in trade flows. Critics will say Canada only implemented its 100% EV, aluminum, and steel tariffs at the behest of the U.S., but the numbers tell a different story. In 2022, 100 million of Chinese electric vehicles were sold in Canada. A year later, that number skyrocketed to 2.23 billion, 13.3% of all EVs sold in Canada. Canada did not act solely because the U.S. told them to. China was gaining market share at an exponential rate. Trudeau's popularity was plummeting. A problem for developed markets is they simply don't make EVs as efficiently or low cost as a company like BYD. This week, BYD put on hold its plans for a new plant in Mexico until after the election. Everyone is in a wait-and-see mode. Countries now have two choices. Accept they cannot compete with BYD at the moment, or employ protectionist measures. The United States, Canada, European Union have all implemented tariffs. Many other countries will soon follow. China went from 0 car exports 5 years ago to 5 million. If it seems unfair that these governments want to target Chinese companies because they build better and cheaper cars, this isn't the whole story. China's domestic sales of foreign EVs have fallen 1/3 over the last 2 years. China provides subsidies and blocks foreign competition. Companies can be punished for normal day-to-day business if it's deemed against Beijing's interests. Just ask Bain and Accenture. China's not playing fairly, and the only conclusion is that protectionism on both sides of the Pacific is going to worsen. Mexico is the gateway to the United States for EVs, manufactured, and low-cost goods. This will become a consequential foreign policy issue for the next U.S. president. Mexico is experiencing a typical Latam power grab. AMLO has already begun dissolving government watchdogs and regulators. Sheinbaum's victory was the most decisive in modern Mexican politics. Experts are very concerned about the speed at which the judiciary changes are being pushed through. The last time this happened was in 1991, when the PRA won in a similar, although less, dramatic landslide. Mexico's institutions were reshaped accordingly. NAFTA was approved shortly after and fully implemented in 1994. The Financial Times America quarterly articles below cover these dynamics pretty well. Here's a chart showing the new legislative makeup. Circling back to how domestic political issues quickly become trade and geopolitical hot potatoes. One of the consequences of the power grab and access to Chinese goods to the United States is they could be considered violations of agreements under NAFTA USMCA. This would be the easiest route to restrict access to the American market. An attendee of a Trump speech at the Economic Club this week in New York shared that Trump had brought up this exact issue with Mexico. It's unlikely the new Mexican government will respond like its predecessors. Public trade disputes can expose other increasingly contentious issues quickly. Even a simple threat could up the stakes materially, dragging in other hot-button policy issues such as immigration and drugs. Mexico's shift left did not happen in a vacuum. There's a term Americans really struggle with: blowback. It's almost to the point of delusion. Americans fail to comprehend how projection of their corporate interests and values across the world pisses off foreign governments and citizens. Mexico is the latest example. The investment boom, drug consumption, and post-pandemic free-for-all that went on in America has had many unintended consequences for everyday Mexicans. The violence in Mexico rivals any place on earth at times. Bringing drugs from South America to the U.S. consumer is one of the most lucrative businesses in the world. The U.S. government is quick to blame the cartels and foreign governments while ignoring its role. Mexican people are living with this violence. It's infiltrated all aspects of their life. The nearshoring investment boom drove up the currency and cost of living. As much as U.S. companies invested, many more just wanted to make money betting on the peso, property, and equity markets. Yes, foreign investment creates jobs. No, it does not create enough jobs to offset the rising cost of living and other negative externalities that came with it. Middle-class Mexicans no longer recognize many of their own places. Puerto Vallarta looks like an expensive Studio 54 with whale watching. Polanco's Michelin-starred restaurants cater to influencers' social media accounts before anybody eats a meal. Residents have been entirely priced out, and cartels have taken over many of the places where foreign money flows in. An average home in Polanco sells for over $600,000, while a middle-class neighborhood's home is still less than $100,000. So let's recap. Mexico swung left on an order of magnitude rivaling a Kirchner or Chavez-type sweep. Mexico has become the hub for Chinese companies to skirt tariffs, and AMLO is systematically dismantling any remaining facade of checks and balances. A new law is in the process of getting pushed through that will politicize the judicial system with justices decided by a popular vote. This is happening in a country that had 37 candidates assassinated in the most recent federal election and 36 in its previous midterm. The Economist just published a series of articles titled Mexico's Make or Break Moment, and Elected Judges has been a disaster in Bolivia. The article shows how the courts have become Bolivia's top prize. The Economist puts the onus on newly elected President Sheinbaum to push back on these changes. In the usual out-of-touch Westerners talking down to leaders and populations it's pissed off, The Economist acts as if this is all a fluke, as if these power grabs are not by design. Canada's ambassador's response to the judicial changes is another excellent example of being utterly tone-deaf to a country where you are supposed to be building bridges. In the BBC article attached, it said the Canadian investors had expressed concerns over the proposed changes. They, the investors, want stability. They want a judicial system that works if there are problems, Ambassador Graham Clark said. Mexicans are furious about war zone levels of violence, weaponized illegal immigration, cartels funded by endless US dollars, and the rising cost of living. The Canadian ambassador wants to ensure the Mexico's domestic courts work for his foreign investors. Bold strategy, Graham. Is it any surprise that a Canadian named Graham is struggling to resonate with the locals? AMLO was clearly not happy with the remarks. I've written in the past about the different approaches China and Washington take to foreign investment. Accepting money from the IMF or World Bank often comes with a heavy say in domestic politics and economic measures. China's investments are often focused on infrastructure with a hands-off 10-plus year terms. Mexico's new president of the Senate, Gerardo Fernandez Noroña, is a Nicolas Maduro ally. This ex-post here is not the type of thing U.S. politicians will look favorably upon. The Senate is within one seat of a two-thirds majority for the Morena Party. New legislation will effectively receive a rubber stamp. U.S. politicians have turned a blind eye to the reality of Mexico's nearshoring falsehood. This will continue until after the election. It may even become a point of attack for Trump and Kamala in the weeks leading up. These Latin American political shifts telegraph problems on the horizon. But Western leaders often choose to hear what they want. Here's a photo, George Bush excited to be in Mar del Plata, and Obama commenting on his admiration of Lula's progressive approach to governance. Here are a few specific examples. Argentina. Nestor Kirchner came to power and immediately began dismantling the military and judicial branch while setting him and his wife up to rule in perpetuity. It was a way to consolidate power without violating the Constitution. Even after his premature death, the groundwork had been laid for his wife to step right in. She did, and her policies were some of the worst in the 21st century. Her driver kept tabs on her cash bribe payments over the course of a decade. Prosecutors allege between $60 million and $160 million were paid out directly by her. It's impossible for politicians in Argentina, nearly impossible, to go to jail. Ecuador was under Rafael Correa when a series of events, including the collapse in oil prices and a major earthquake, broke the country. They were using the US dollar, which again is another risk when dollarizing that most Western thought leaders don't really understand. Rafael went from a thoughtful socialist leader, waxing Hugo Chavez philosophical on Charlie Rose, to a guerrilla fighter in the woods outside of Quito. Brazil. When times were good and commodity prices were high, Lula looked like the leader of the Workers' Party Brazilians could be proud of. When the tide went out, Petrobras got hung with a $7 billion write-down, $2.1 billion of which was directly tied to bribes paid out. These are only a few of the examples in recent history in Latin America, but the results for investors have varied between bad and catastrophic. What does all this mean? Mexico's shift left foreshadows problems with the U.S. and financial outflows in the months ahead. Equity markets, property markets, and the peso are all now a sale. Here's a good rule of thumb when trading LATAM currencies. Sell currencies when left-wing leaders or self-styled socialists are elected, even if they're thoughtful and well-spoken. As poverty rises, the larger the country, the more entrenched the corruption. Foreign investment will stop and eventually reverses. For all the talk of Western foreign investors piling into emerging markets, it is often the financial markets, ETFs, and currencies that receive the bulk of it. Investors can always mitigate risk by keeping the funds in a New York clearinghouse or London bank. China invests directly in infrastructure. The Western money is akin to hot money. Exiting is usually only a click away. Here's a chart of the Brazilian real since 2017. The purple lines mark the arrival of right-wing President Bolsonaro and the return of left-wing President Lula. You can see here that it strengthened outside of the pandemic for most of Bolsonaro's term and began weakening immediately after. Social spending in Brazil has become a problem. Export revenues are all-time highs. Gustavo Petro, Colombia's idealistic left-wing president elected 2 years ago, was going to take the country entirely off of fossil fuels. The Colombian peso collapsed over 25% in the first 6 months after he won the runoff election. His approval rating has fallen by 21 points since his election. Alberto Fernandez turned on the central bank printing press of Argentina in a way that would make Rudy Havenstein blush. The Argentine blue dollar was 70 when he took office. When he left office, it was 990. So what does this say about Mexico? The road's about to get rocky. American politicians are accustomed to delivering ultimatums. Do as I say, or the consequences will be severe. America does not like hearing no. Financial sanctions and tariffs have become everyday tools. Fences make great neighbors, threats do not. The new government may not be the pushover Washington expects or is used to. Latin American leaders have a history of resisting when they consolidate unchecked power. Pushing too hard risks an effortless pivot towards Beijing. Many in the Morena party would welcome this. Trump is not known for his diplomacy, and Kamala is not known for her experience. Investors will get nervous quickly, which suggests it's time to sell Mexico. The peso has more downside. There is no post-U.S. election tailwind on the horizon. Mexico will be a geopolitical challenge for whoever wins the next U.S. election. A weaker peso would be welcome by the exporters and locals alike. Mexican equities are also overvalued. See the chart here of EWW, the ETF. The chart is broken out to the downside. A close below 50 opens the door to the next leg lower. Another example is Pemex bonds. They've been the darling of Latam corporates for the last few years, paying low double digits with quiet certainty that the government would backstop any issues. Investors thought the same thing about Petrobras a decade ago too. Here is Mexican oil output. It peaked in 2004 at 3.9 million barrels. The country now has plans to ramp it back up. The problem is if Washington were to end up in any sort of feud with Mexico, one of the first things they've traditionally cut off is access to U.S. shale and other technology. Not saying that'll happen, but it certainly is a red flag when Mexico's plans to ramp up production are somewhat dependent on working with its northern neighbor. So, shifting back to the U.S., Donald Trump's first 4 years in office and pandemic response were driven by his conflating the financial markets with the real economy. If the S&P went higher, the economy must be good. We can see why income inequality in America has exploded when 50% of Americans have zero exposure to equity markets. This suggests Trump will talk tough on Mexico, but maybe he backs off. On the other hand, Trump has a history of trying to do what he says, flip a coin. Even less certain will be Kamala's strategy. She appears much less beholden to the markets. Similar to the Biden administration, an increasingly war-hungry contingency within the left, Kamala may welcome confrontation to prove she is tough on China. This is gaining popularity in the swing states. The path forward for U.S.-Mexican relations is fraught with danger. We hope you enjoyed following along on this little tour through Latin America. Please subscribe here and download the Easy News app.